Hello, viewers, and welcome back to yet another insightful episode of the Two Cents podcast brought to you by the Banking Drive Committee of Symbiosis School of Banking and Finance. Today's topic for the discussion is crisis management and resilience building for commercial banks.
So we have with us today Mr. Prasad Honshetti, sir. Sir is a seasoned financial expert with extensive experience in structured debt, advisory, and wealth management. Sir has worked with top institutions like Kotak, Bajaj Finance, and now currently handles Fit-in Services, which gives financial advice to small and medium businesses.
Hello, sir. Welcome to the show.
Thank you. Thank you so much for having me over.
So, sir, we would like to start with the first question. So, basically, we are trying to understand, in your opinion, which crises have commercial banks encountered in the past, and what lessons have these banks learned from these crises?
So if you look at the last 30 odd years, okay, commercial banking in India has matured and is now very well connected to the global banking scene. So we have had lots of crises, some small, some big, some localized, some of a global nature. For example, the 1998 currency crisis, the 2008 crash, which affected banks all over the world. Then we had our own NPA crisis, say about 10 years ago, when the public sector banks in India went through their cycle of NPA recognition and the pain that followed that. But what we can say is that in all these times, courtesy our regulator RBI, who has been very strong, and the prudent systems which have been in place, the banking sector has always evolved stronger. 2008, if we take the example, Indian banking has not been impacted to the extent that maybe banks in US and Europe were impacted. We didn't have the financial complexities which they had, which helped us then. Even during our own NPA crisis, where public sector banks and even some of the private sector banks were forced to recognize NPAs, which they were probably not recognizing in the sense that they should have, RBI ensured that these banks came out of it stronger. Yes. In the case of a bank like Yes Bank, which was very close to failure, RBI arranged it should be bailed out. In case of other public sector banks, it ensured that the government supported them. So yes, there have been crises, small and big, but courtesy of RBI, with the help of RBI, the commercial banks in India have always emerged stronger. And today, there is so much proactive stress testing going on. There are so many proactive meetings between RBI and the various banks that thankfully we can say that even if there is a crisis, any bank in India today is very well equipped to handle it. I hope that answers your question.
Yes, sir.
So coming up to the next question. So as we know, financial inclusion is a very important agenda globally. So how do commercial banks cope with financial inclusion in times of crisis like the 2008 financial crisis or maybe the COVID crisis?
So this is a very interesting question, and this has been something which when I was working in banking, we used to have this question a lot. That financial inclusion is one, but then when you are in a crisis situation, like you mentioned in case of COVID or during the financial crisis of 2008, how do you balance the two? See, you have to understand the fact that financial inclusion, don't look at it only from the point of view of something which the government wants, and that is why it needs to be done. If we look at it from that point of view, it will always seem like a burden. But the flip part of it is that the more financial inclusion there is in our society, the better it is for the banks also, because it can act as a very powerful risk management and risk mitigation tool. So the smaller accounts which you are opening, they can be much more stickier, they can be much more stable, they can be accounts where you don't have to do a lot of servicing, but that money does keep on coming in, which can be generated and plowed back into the economy for fruitful purposes. In case of crisis, yes, probably the attention shifts a little to the crisis management part, but my personal opinion is that even in those times, we should not look at financial inclusion as a burden or as something which needs to be done. Banks should view it from the lens of a profitable, scalable business, which will give them good return on equity and it will also open a lot more profitable business channels for them. That is how I would say financial inclusion needs to be looked at.
Thank you, sir.
So, sir, recent days we are hearing a lot about Viksit Bharat mission for India reaching 30 trillion and then GDP increase. So, how do you think commercial banks will play a major role because it's the backbone of any country? So, how is commercial bank looking to look forward and attain
So
those global benchmarks?
So if you look at any economy, banks play a very very important role because banks are uh, distributors of capital. So if under Viksit Bharat we want to be what a 30 trillion economy, so going to that is going to require a lot of investments. It is going to require a lot of capital building. It is going to require a lot of skill building, and in all these areas, it is commercial banks who can take the initiative. So any kind of investment that is required, ultimately people are going to come to the banks for loans. Corporates are going to approach the banks for the loans. The government is going to approach banks when it wants to raise money. Okay, so whether they like it or not, commercial banks will play a very very important role in this agenda. And this is not just in case of India, this is in case of any economy. Wherever there is economic growth, banks are the distributors of capital. Banks are the uh, people who channelize the savings and convert them into capital. So they will of course play a very very vital role. And for this kind of an initiative where we are trying to reach 30 trillion, banks will need to be very strong. They will need to be very nimble, agile. They will have to watch the risk on their balance sheet like a hawk, ensure that it doesn't get out of their acceptable parameters, because it is going to require all the strength, all the effort, and all the money that banks can put together to reach this target. So banks are going to play a very important role.
So, do you think the current set of strategies which banks are using is sufficient, or they need to have some more measures or any specific measures which can attain this goal faster?
So we talked about financial inclusion in the earlier
Yeah.
discussion. So I think that financial inclusion will have to be driven very, very aggressively if we want to attain this 30 trillion goal. Banks will also have to be more proactive in terms of their risk management. RBI has been nudging them; they are doing it, but I think the proactiveness will have to go even higher. And one area where I feel banks and this will also involve the government and RBI is that we will need a lot more deeper and a lot more broad based of a debt capital market, which is right now something which we are lagging behind, I would say. But if that develops quickly, then it will really, really, really help in this mission. That is my personal opinion.
Thank you, sir.
So, sir, as you spoke about capital investment, so as we know, there are unsecured lending modes also, and which are increasing day by day. So, how are banks coping with them, sir?
So this is an interesting question again. If you follow the news, RBI has been keeping a watch on the unsecured portfolio of banks as well as NBFCS, and in certain situations, it has stepped in and said that certain organizations were not allowed to build further business in this area. So, from a financial stability point of view, I think unsecured retail lending is a slightly risky product uh, for both the consumers as well as the institutions. And see, any banking product is like dominoes. If one of them falls, the rest of them fall really quickly. And this is especially true in the case of unsecured retail lending. It has been the product which has been very easy for a lot of institutions to get into. So that is why you will see that a lot of NBFCs have mushroomed in the last 5 or 6 years, who have aggressively distributed these products, and probably there has been some kind of a relaxing of the credit standards, which is what worried RBI. And rightfully, they are looking at those balance sheets where they feel that the risk is much higher, because ultimately whether you look at NBFCs or whether you look at banks, it is the public money which is at stake. So to answer your question, yes, unsecured retail lending seems to be a little bit of a worry right now. But with RBI proactively looking at it, I think we don't really need to be concerned.
As you spoke about NBFCs, so how are they addressing the rising number of customer complaints against them?
I think it is work in progress. Okay, it is something which will always be there because the number of NBFCs is growing, the number of new products is growing, the number of new consumers that they are tapping and bringing into the the formal financial channel, that is growing. So there are bound to be some customer complaints, and like I said, it's work in progress. So this is not something which we can expect someday that okay, now for the next 1 year this will happen and it will stop. No, it is not going to happen. It will continue. RBI on its part is again playing a very big role. You have the ombudsman now, so if you're not satisfied with the solution given by the institution or the NBFC, you can always approach RBI. So I think this is a process. This is a part of the process, and it is something which we have to learn to live with. It is work in progress. You can't just wish it away.
So, sir, nowadays we are learning a lot about AI, machine learning, and then things like DeepSeek, which is in uh, like it's a trending thing. And since banks considering it's a core business and where security and data client privacy is a need of the hour, so how banks are trying to build their ecosystem, which will help to protect the client data and ensure that they are delivering services along with maintaining that part of security.
So I was reading somewhere that financial institutions, which include banks, will be the largest customers for data security firms. And like you rightly said, data security is a very serious business for banks. uh, Banks have been employing a lot of their capital in terms of money as well as human resources towards this. We have not seen a very large significant data breach with Indian banks, at least now, like the ones which we have seen maybe abroad. Having said that, we should not be relaxing, and banks are not relaxing on it. Even RBI is there as the regulator. So you must have probably come across this instance where they stopped Kotak Mahindra Bank from onboarding new customers under their online platform,
Yeah.
because they felt that their systems were not secure enough. Kotak worked on it for almost 1.5 years, and now they have again been given the go ahead. Similarly, HDFC Bank was not allowed to add any more credit card customers for quite a few months. So Indian banks are definitely taking this issue very very seriously. A lot of you, when you will pass out, you will start working in banks, and then you will come to realize that even being employees in the bank, each and every employee is also cautioned, is told the importance of data security.
Yeah.
So it is like the bank is trying to create a culture of data security, so that every person acts as a shield, acts as an armor for any kind of data security attack that is going to happen. Of course they are building their systems, but then the phishing and the malware attacks are also changing day by day, so they are also upgrading their systems day by day. So again, somewhere to an extent, this has become a WIP kind of a work in progress kind of a thing, and it is there. It is there very much something that banks have, and we consumers of the banks have to learn to live with it.
Right.
So, sir, coming to the last question. So, how do Indian banks mitigate unique risks such as credit default in rural areas, or maybe there is a theft of the cattle or anything basically in the rural areas based to the agriculture? So, how do banks mitigate these risks?
So this is a very very unique and a very interesting question you have asked. And see, I'll tell you, whenever there is any kind of a product in the bank, Okay, it is looked at it from the perspective. There are various perspectives to look at it. So there will be a business team which will analyze, what is the kind of market acceptability of this product, how many people will avail this product, what kind of margins can we earn from it. There will be an operations team which will see that is my backbone, IT backbone, equipped to service this product? Can we handle this product? So similarly, there is a risk team which will see what is the kind of risk that this product carries. So when we are talking about such products like cattle financing or rural financing products, these teams have really looked into all these scenarios that you just spoke about. That what happens if I have financed a cow and that cow goes missing, or what happens if I have financed something under post harvest financing and the godown catches fire. So there are adequate measures to ensure that this does not happen. Even if in the case that it does happen, then you have insurance for that. Okay, so you insure whatever asset that you have financed. It might be cattle, it might be livestock, it might be crops, anything of that sort. Then a lot of these products are very very what I would say human dependent. So you will have a lot of people who will be on the ground. They will be visiting those customers who have availed of these products. They will be seeing that, okay, if I have financed this person to buy two cows, are those two cows there? Are they giving enough milk? So they will have a cycle where every 2 months they will have to go and visit and check whether those two cows are there, whether they have been vaccinated properly or not. So depending on the product, a very very robust risk mitigation strategy has been put into place, and then these products have been rolled out to ensure that such risks that you mentioned are taken care of, and these are constantly being refined. So there is something new which comes in front of the team. They immediately refine their process, they change their standard operating procedures, and they ensure that, okay, this new risk is also taken care of. So all these products are very well thought of. They are tested at a small level before rolling out at a large level to ensure that such risks are contained. I hope that answers your question.
Thank you, sirs. Your valuable insights has really helped us understand the crisis management and resilience building for commercial bank. I hope our viewers equally gained beautiful insights, and they are surely looking for some more sessions from sirs, and we can continue this podcast series. So, if you have liked this session, please do like and subscribe our channel or SSBF page. Thanks for watching.
Thank you so
Thank
much.
you, sir.
Thank you.